Hi, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion of what is happening in the economy, the world of finance, and personal investment with Art Jarvis. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Now here is Taking Stock. Welcome, Art Jarvis. Taking Stock, episode 57.
How we got that?
Yeah, 57.
Yeah. Well, thanks for having me here for 57 episodes.
Are you enjoying it?
Yeah, immensely. Actually, this is a good process for me.
We didn't do 57 yet, but do you think you'll come back for 58?
If God willing and the creek don't rise, right?
Well, I'm going to ask you that starting question I always ask. So how are you?
I'm fantastic. Thanks for asking.
With everything that's been going on in the world, that's good. I mean, especially the marketplace.
I'm a firm believer that God's got everything under control. That includes the market and other things. So my job is to what is my job?
Some sort of a financial advisor.
Yeah, somewhere. My job is
leading the troops, because there's more than just you at Jarvis Global Investments.
Yeah, I'm nothing more than an assistant. That's all I am. So
outstanding.
There you go.
But you're doing well.
Yes, very well. How about you?
I'm great, thank you.
Good. Glad to hear it.
I think we already covered that. Even maybe not. I don't know. Anyway, the doctor said I was good. So.
Good. Oh, that's right. Yeah.
So
we did cover it. We're enjoying second summer here in Cincinnati. So
people wanted to jump the gun on fall because we had a little bit of cool weather there, and it's like I don't think so.
I think it might have been Randy Rico that posted it. I saw it somewhere, but it was like, I'm going to get it wrong, but like the 8 stages of the seasons in Cincinnati, right? And it was, second or fake fall and second summer, and I was like, that pretty well describes it. So here we are.
Fake fall and second summer. Well, I think when you arrived here at Studio A, Loveland Beacon Studio A, I think I said, summer has caught its second wind, which is an interesting fact because it has been really warm again the last few days. But as one who bicycles, it has been windy.
Oh, yeah. Well, that's a good thing.
A lot of people, if you're just walking around out there, not necessarily so noticeable, but get on the bicycle and ride into the wind. And you say, it's a little bit windy.
Yeah.
So, who cares?
Well, I'm not the smartest individual in the room, and there's only 2 of us in the room. But I did wear a black polo to a very nice event this morning, and we did I'm going to go ahead and say Impacting Tomorrow had their ribbon cutting this morning, and the ribbon cutting was out in the parking lot, and I should have gone with the white polo, but I didn't. So it was,
the black polo with the gold Jarvis Global Investments logo. Mm-hmm. That's a good looking polo.
Good, thank you.
It is. So we got to get you
a shout out to RP Diamond for the shirt. How's that sound?
That's good.
Today we're mentioning all of our sponsors.
Anyway,
I might stop at La Rosa's on the way home and have a little bit of La Rosa's.
After which you got to go get a dessert. Whippy dip from the Loveland Dairy Whip.
Right after it opens at 2:00.
So,
but we digress.
Well, I don't know what's happening at your house, but you may want to call TMC Construction Services in case you've got some remodel projects coming up.
Well done.
Just so you know.
Yeah.
I mean, but mainly Jarvis Global Investments feature is Taking Stock.
Yeah.
So here we are on Tuesday about noontime, finally sitting down to record episode 57 of Taking Stock after, as you said, a fine morning, a beautiful second wind summer morning, ribbon cutting for Impact.
Impacting Tomorrow.
Impacting Tomorrow. Anyway,
there are great things going on there.
I'll have to go talk to them.
Yeah.
and share the news with the community.
Yeah, definitely.
About who is and what are they doing. But that aside, it has been a busy couple weeks.
True.
Taking aim as we do this on Tuesday, September the 15th, which, by the way, the last day of, or the first day of autumn is September 22nd. So summer is not over, folks.
Sure.
Regardless of the fact that you had your cookouts and closed your swimming pools on Labor Day weekend. That was your mistake.
Right.
But anyway, summer's not over yet.
As I said, summer's over when Kim goes back to work at school. That's when
See, everybody has
at
their
Jarvis
things.
house.
You know, well, in school, the school systems are all screwed up. You know, in Atlanta, they were back to school the 1st of August.
Yeah.
What?
Yeah.
You know, anyway, we don't want to go down that path. But the bottom line is we sit here on September the 15th, on Tuesday, we know the feds will be meeting tomorrow.
Well, they're meeting today.
Well, I mean, the news from the feds will come out tomorrow from the meetings today.
Correct.
And so let's just dive right into that.
Okay, so I mean, yeah, as you said, so we will get an announcement Wednesday, September 17th.
That's Thursday.
Is that Thursday?
Well, I don't know. I thought today was the 15th.
Today's the 16th, so yeah, tomorrow's
today's
the
the
17th. Yeah,
I
know.
I'm a day behind.
All
No,
right.
you're correct.
Rewind. No, just kidding. Anyway, so 2 o'clock tomorrow, we should get an announcement from the Federal Reserve.
We can stop recording and start this whole thing over.
No, it just gives us realism. That's all. You know, it just. We never said we were the slickest show in town, so, so they're deciding today and tomorrow, and I'm sure they've already been talking about it, but, you know, are they going to leave rates alone tomorrow or drop rates? Now, there is a third option. They could raise rates, but I don't even think that's in the same solar system.
They're not discussing raising rates.
So
right?
if you would, not at all. Yeah, no, that's not a conversation right now. But so you know, the interesting thing is it is already a 99% foregone conclusion that we're going to get a quarter rate cut tomorrow. Okay, so that's almost a given. Now we have a 20 or 25% chance, according to the markets, that we might actually get a half a point cut. So now that has, since the employment report a couple Fridays ago, which we need to get to, but since that, you know, all of a sudden everyone is very confident we're going to get a quarter. Now they're starting to wonder if we should have half a point. The quarter point is priced into the market, so once again they have.
It's already there.
It's there. So if you look at it, like if you look at the 10-year Treasury note right now, Treasury bond, you know. A few weeks ago, we were in, call it the 4.4% range. Today, we're at basically just call it 4.05%. So we've basically taken 35 basis points out of the 10-year Treasury here in the last few weeks. So that tells you that quarter point's already priced into the market. Not only is it a quarter point price from that day, you got a little extra in there too. So let's say they cut a quarter tomorrow. If they cut a quarter tomorrow, that's kind of like, kind of boring, yawn, it's already priced in the market. What are you going to do for me next is going to be the question, right? And that's how the market's going to react. Do we think they're going to continue? And it's going to be based on what Fed Chairman Powell has to say when he goes and talks to the press and all that afterwards. But what are we looking for next month or in the next couple of months? Are we looking for another rate cut? And there has been some talk, you know, not only about maybe a half a point tomorrow, but, you know, actually, if not, still getting another rate cut in 2025, which I have expressed my opinion about that I still don't feel it's necessary. But the other side of the equation is, you know, so let's say they don't cut rates tomorrow. That's bad, okay? Because it's already in the market. It's in the equity markets. It's in the bond markets. It's already in there. If we don't get it, tomorrow afternoon is going to be a bad day, okay? If we get the quarter point cut...
Well, wait a minute. So let's draw that picture.
Mm-hmm.
If they don't make the cut, because it's already there, it's already priced into the market, as you said, then that's going to be a bad day. Or a bad afternoon once that announcement is made.
Right.
We're going to see everything tumble?
Yeah.
Yeah.
Yeah, I mean, you'll see interest rates go back up. I mean, again, a lot of this depends on what he actually has to say afterwards, I don't think there's much he could say, to be honest with you, to cover up what the reaction's going to be, though.
Well, that's my next question. Let's stick with the expected announcement of a quarter point reduction in the rates.
Right.
And so following that, Powell's going to speak.
Correct.
What do you anticipate his words are there? I mean, are you thinking that he'll hint at, this is a quarter, we're thinking about an additional quarter, we didn't make a half a point rate reduction now, but, we're keeping an eye. Well, I mean, what do you anticipate are the words from the Powell that would be following a quarter point rate reduction?
My sense is that he will, if he does a quarter point tomorrow, that he'll start talking about another quarter point in the near future. That's my sense. And here's the problem, and we'll bring it. 2 Fridays ago, we got an adjustment to the unemployment numbers, right? Unemployment to the tune of, for the last 12 months, 1.2 million jobs. They came out and said that they were off for the last 12 months by 1.2 million jobs.
To the good or to the bad?
To the bad.
Okay, wow.
So that opens up the part of that equation that says, okay, you have some room to do more cuts if you want to, and that's what really got the markets going here over the last 2 weeks. Here's my problem. Here's Art Jarvis's problem. I don't know what to believe. I haven't trusted 100% the employment numbers since back in 2020. Like, so many times they haven't made sense, and you kind of look at it and go, where's that number coming from? And then you maybe get a revision the next month or something, but you still kind of look at initial claims and other reports, and then you get the employment number on Friday, and you're like, that doesn't make sense, okay? But, again, as I've mentioned a lot of times, I still continue to follow the trends. But 1 point, we were off by 1 point. This is what they're saying to us. We were wrong by 1.2 million jobs over the last 12 months. How is that possible? Okay, and that's where you get a reaction from our current administration that, heads are going to roll, and, people are going to get fired, and we're going to bring new people in. So, in many ways, I most certainly understand that, because if you can't, I do understand not getting the number perfect the first time, but I do expect a reasonable adjustment within the next month or two.
Not 1.2 million.
I don't expect you to come back to me 12 months later and say we missed it by 1.2 million jobs. That's god awful ridiculous.
I can't ask you how did they miss it, because what you're telling me is I don't understand it. How could they miss by that much? You're asking the same question I would be asking you to answer for us. And then the other side is, I don't know what to believe. Yeah. So, on that note, why would they report it? What's the benefit to reporting a number incorrectly? And then ultimately having to come out with a huge adjustment?
I will play conspiracy theorist.
I was going to say we have to
do
the whole devil's advocate.
Let's look at it from this side of the equation. We don't want them to lower interest rates, because that'll only help the economy, and by helping the economy, that'll only make the other side look good, right? Or if I'm on this side, I want to show that numbers are way worse than they were thought to be, and that solidifies my position that we need to have a rate cut. Okay?
And we need to help boost the economy.
Right, definitely. But if you're me sitting here in good old Loveland, Ohio, what's the right answer? Is it this number? Is it this number? Is it somewhere in the middle? If they're truly off by 1.2 million jobs, number one, systems need to be looked at. We have the technology these days. Reporting systems that so easily should be able to be interconnected that we should be able to get a number that doesn't change too drastically, right? But the other thing is then, all right, if it's not the systems, which it might be part of it, but if it's not the systems, then we have some incompetent people that I do agree that if you're that bad at your job, we need to find someone else that's better at it. Okay, and that's coming from a business standpoint.
Who are those heads?
Well, I'm sure there's some names out there. There's some pretty smart people out there in the world that
put names on. What are the positions? What are the positions that are filled by people that are accountable for reporting those numbers and getting them right? I mean, I'm not really asking you to define all those right now. I mean, but that's something to think about. So again, we've had, it's Tuesday, so we're 3 days away from Friday, but so we've had 11 days since that, jobs report,
correct,
employment report, and the market has done what it's done, including just finished really strong last week.
So the market is reacting from the standpoint of they believe the corrected number is more true, that this economy is not as strong as they originally thought it was, especially from an employment position. So they've reacted to the standpoint that we're definitely going to get a quarter point. That's how the market feels right now. Well, we might get half a point. So not only did we get, we dropped all the way down to 4.050. Actually, 1 point we hit 4%, I think, late last week. And then, we were sitting here talking 13 days ago about how we were looking to see if we made it to 6,500 on the S&P. We were going
to get to that.
Yeah. That Wednesday we talked. We were at 6,450 on the S&P 500. We were smiling and getting all giddy about, hey, let's get to 6,500. Well, guess what? Last week we blew right on through 6,500. We're sitting at 6603 today when we first started.
After a drop this morning, because it was 6315 or something at the close yesterday.
Right, so we blew right on past.
6615.
Yeah, and that's people hoping that we're going to get lower interest rates. Lower interest rates is going to continue to fuel the economy, and we're going to end up with stronger corporate earnings and stronger gross domestic product. Speaking of which, if we didn't talk about it 2 weeks ago, they revised the gross domestic product number from up 3% to up 3.3%. So, here I am sitting going, okay, now they're telling me that we had 1.2 million less jobs created during this time frame, but then over here you're telling me our economy's growing at 3.3%.
See, this whole thing is tremendously confusing to me. Let's see, a bad number reported 11 days ago on Friday regarding employment jobs, and the economy, it's like, the economy's not as strong as we thought, but caused the market to climb, to shoot right past 65. This talking about the S&P specifically. The S&P shoots right through 6,500, goes to 6,600 plus a couple. And so it's like, wait a minute, that was bad news, and we got a good reaction because of the anticipation of, what would be considered good news. And Art Jarvis, this is why Chuck Gibson is a journalist and not an economist. I can be completely confounded, confused, whatever by this. The best thing I've learned is fear and greed and uncertainty. And I've learned that from you, but that does not an economist make. Obviously. So journalists, all I have to do is accurately report what I'm told.
Right.
I don't have to speculate it, or I can analyze it, but I don't have to. I can just report it, and then the readers, or the listeners, or the viewers, whatever the medium may be, can decide for themselves from the facts as reported.
And let me say that's...
I'm not an economist. That's a long way.
Let's say that also is what makes you a breath of fresh air.
Well, I appreciate that.
Okay? I mean, give me both sides of the story and let me decide. Don't tell me what I should think. Let me decide. And that covers a whole gamut of things, right?
Well, this has been one of the fun things. I hope it's been as fun for you. You keep telling me it's fun. But taking stock every 2 weeks, getting together because you share your personal view, as you have regarding the reduction of rates and what the Fed's doing or not doing. You've shared that opinion, but you've also explained what's happening and why they might do it and what the reaction to that may be. And then, once the reaction happens and we're back 2 weeks later, we're talking about it. So I think that, that helps get the information out there to the people. That's the whole purpose of reporting these stories and doing this show, is to get information out to the people to help guide them in their decision making.
And I'm sitting here, I'm crabbing and moaning about the employment number, right? But here's the thing, I don't just look at the employment number. There's a whole lot of other things that I pay a lot of attention to, and I look at the trends, money supply and interest rates and corporate earnings and all kinds. Gross domestic product, 3.3%. That's a nice number. It's a very nice number. Inflation, still 2.9%. It's still below 3%. I've said it many times. Give me 3% and I'm going to be a happy camper. Okay, I can work with that. And unemployment number, I think it went up to 4.3, if I'm not mistaken. It went from 4.2 to 4.3. Okay, well, to me, in my world growing up in all my economics classes and my experience doing this job, is 4.1, 4.2, 4.3 is basically natural unemployment in the United States. Now, with technology and all kinds of stuff going on, maybe that thought has changed a little bit, but not too much. So, employment making me nuts. All these other numbers, to me, still confirming that we're in good shape. So until if we had 0.2% gross domestic product, our economy was growing but barely, and then you give me an employment number that says, okay, but guess what, we were off by 1.2 million, I'm way more concerned there than I am today with 3.3% gross domestic product and low inflation and all that stuff. So, I don't like it. I would like to have an explanation. I would like to see that be fixed, because I'll say it one more time. To be off by 1.2 million jobs in 12 months, that's 100,000 jobs a month that they are off by. Okay? That's ridiculous.
The challenge for me in terms of employment numbers, well, not even employment numbers, but jobs numbers, is the what do you want to call it, low-paying jobs that are out there. Some positions. What the heck's going on? We have businesses, especially in the service industry, restaurants and so on. They can't get anybody. Yeah. So it's this again. I get where you're coming from when you say I don't know what to believe. Well, I don't know what to believe. From just not even talking about numbers, but like places can't find workers.
Right.
And so why is it, if you can't find workers, everybody must be employed.
They want to be employed. Right.
Right. That want to be employed. Right. In case you didn't hear that, everybody's employed that wants to be employed.
Right.
And then getting back to my question regarding jobs is, what about those jobs that people just don't want? At least that's what it seems like.
Yeah. Oh yeah. And
where do those fit into that number?
That's a whole nother hour show. Let me tell you. So, but you
have to we have to touch on that, because the truth is, you're expressing, like you said, the employment, jobs number is making me. I'm happy with these numbers, but this is making me crazy. Well, why is it making me crazy? We can't even explain it.
Right. Well, someone's not doing their job. That's all there is to it. It is. Again, it's statistics, all right? And there's a lot of smart statisticians out there, if I said that right.
Close enough.
A lot of smart ones out there, right?
Right.
And, you do everything with a certain degree of confidence. That's what stats is about. I'm trying to come up with answers within a certain degree of confidence, okay? When you do these numbers and every month, and it's like, okay, and it's this is the number with a certain degree of confidence, okay? But then next month when they report the revision to last month, for me, that number should be much closer to the truth or the actual correct number, okay? You don't get to come to me 12 months later and say, hey, we were off by 1.2 million jobs. That's not how it works.
Right.
We're in a society throw artificial intelligence and all kind. Maybe that's the problem. Who knows? But we're in a society where we have the technology. If someone in Columbus, Ohio, types some kind of unemployment information into a computer, that information should be going to the Board of Economics and things like that. That you would think that there's algorithms and there's databases that almost in real time collect that information, right?
Sure.
Again, that's what's going on in our.
That's what we believe because of all of the technology. That's what we do believe. We believe this should be easy and it should be accurate.
Yeah. I mean, if you want, someone can tell you where Art Jarvis was yesterday at 2:32 p.m. Right? I mean, if they want to look, they can figure it out. Right? That's where our technology is. You tell me you can't count 50 states worth of information and tell me what that number is?
Yeah, no, this is what we believe.
I'm climbing higher up on my soapbox here, so.
Well, there's nothing wrong with climbing up on that. This is interesting. I was talking to you before we went on to begin recording this about, preparation. So I was thinking about this show last night, and I thought the main thing that I want to get into today is, what's driving the market right now. Because it was being driven up, even though today has been a little bit of a bumpy start. Yeah. And so here we are with just a couple minutes to go. And in all honesty, I didn't have to ask you the question. You have absolutely answered that question multiple ways, in different aspects of that question. What's driving this? What's driving that? What's driving us up? What's driving us down? What's driving tomorrow? Right. Which, of course, is going to be wait. And let's hear what Jerome Powell says. Yeah. I will expect, people may or may not know this who are listening, I will get a text message from Art Jarvis tomorrow at some point. Maybe we'll even do more than just a text message.
It might include an emoji.
Yeah. Well, if it includes an emoji, I hope it's dollar signs with a smiley face.
Yeah, that or thumbs down or devil. I'll come up with something. Yeah.
Well, yeah, I love it when you do the devil's horns, the angry devil's horns. Yeah. It's like, and that never has anything to do with Jerome Powell.
Yeah.
But anyway, so the bottom line, as we come to a close over the last couple weeks, so the jobs number was just a bitter pill to swallow.
The jobs number was the source of my aggravation for the last 2 weeks.
Yeah.
I mean, clearly, I'm still not pleased. I'm still not happy about it. I'm not. I mean,
I know.
It's like, I try and be
listeners
reasonable.
know.
I try and be reasonable about how I do things. I try to be consistent about how I do things, and I believe that has served me pretty well for a long time. Okay, if you start telling me that the information that you're giving me that I'm using is not accurate, that hurts. Okay, that's not a good thing. Okay, so that's why I'm being a little bit on the passionate side about it. Is look, I need good information.
And we trust that you dig for that, and that's what you share with the listeners here on Taking Stock, bi-weekly, is good information. And I have a pretty good idea how hard you work at it, and I'm amazed because we go off on these tangents and you bring it home. Yeah. And hopefully the listeners are getting good information from it, taking time to hear it all the way out. But guess what?
Time's up.
30 minutes flies by.
It really does fly by. We might have to extend this to an hour show. No, I truly would not do that. For the people who listen for a half hour to us talk about economics and stuff, God bless them.
Well, I try to, I think it's pretty easy for me to, as we come to the close of a show, to say thank you, Art Jarvis, for being here and sharing this information and sharing your insights. But maybe I've been remiss because really you make a great point. We need to thank the listeners.
Oh, 100%.
I need to thank the listeners for coming on to Loveland Beacon and clicking on the podcast Taking Stock with Art Jarvis And we appreciate you, the listeners. And we've offered many times. There's a way to get a hold of us. There's a way to throw a question out, and we would be happy if there's more things that you'd rather hear, or some information that we haven't shared that you'd like to understand better. Send a question. Loveland Beacon. News at lovelandbeacon.com or something like that. But or just search the Jarvis Global Investments website and reach out to Art and Company, and we'll go from there. But
definitely. I mean, it's we want to give you the information that you want to hear.
Right.
Okay. If you're like, I would really like to hear more about this. Fantastic. Guess what? We'll talk more about this. It's my favorite saying. There's no such thing as a dumb question. Okay.
Correct.
Yeah. So I mean, guess what? If you don't, everybody isn't like me and has spent a life playing around in finances, right?
Right.
So you ask me to fix your car, you don't want me fixing your car because I can't fix it, right? So it's the same here. If you've got a question, something doesn't make sense, please ask.
Yeah, do that. Well, and again, thank you so much for listening. And Art Jarvis, thank you again for being with us. That does bring to a close Taking Stock, episode 57.
Right.
We'll be back in 2 weeks, if not before, with a little information on whatever the feds do.
We'll see what happens. Thanks, Chuck.
All right, you bet. Thanks for joining us for this edition of Taking Stock with Art Jarvis. Join us again in 2 weeks for our next edition. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Jarvis Global Investments, LLC is a registered investment advisory firm. The advisor is not attempting to furnish personalized investment advice or services during this production. Individuals should fully investigate the appropriateness of any investment before investing. Past performance is no guarantee of future results. Investments may lose value.